Welcome to the Hurst Trading Room. This is our video update for the 11th of February 2013. As always, please make sure that you have read and understood these disclaimers before we take a look at the markets. First of all, the S&P 500. Now, the S&P 500 taught me a lesson last week because there is a very important rule in the FLD trading strategy that I forgot to apply to my trading last week. It's all very well having created the rules. I should try to remember to apply them. And that has to do with trading on a Monday. And if you take a look at the detailed video about the S&P 500, I discussed that in a little more detail. And it of course has to do with the fact that on Mondays, very often prices will come down to the FLD and bounce straight back up again, or at least interact with the FLD in a slightly unexpected way. And so I didn't follow that rule, and so we were entered into the trading opportunity, which of course turned out to be a losing trading opportunity in the S&P 500 last week. As a matter of interest, on Tuesday, as soon as price bounced back up again, something became very apparent, and you can see that in this analysis over here. And that has to do with what we were speaking about in last week's videos, which is the situation that's unfolding in the US markets, where there is clearly a dominant cycle of probably 20-week magnitude. And when we have a dominant cycle of 20-week magnitude, we expect the 80-day cycle trough in the middle of that 20-week cycle to be very subtle, or perhaps even hidden. You can't even see it in the price movement, and sometimes, of course, straddled. And I discuss this in more detail in the detailed video about the S&P 500. But on Tuesday, it became apparent that the 80-day cycle had very possibly formed in price, and that was on Monday. And the price was bouncing out of that 80-day cycle trough. Now, in the situation of a straddled 80-day cycle trough, I would not be interested in taking an A category long trade, and so our next trade in the S&P 500, according to this analysis, is still a short trade. It is a B category short trade. As you know, we very rarely take B category short trades except when the 80-day cycle trough that precedes that B category trading opportunity is a straddled trough. So I speak about that in more detail. It's a very important and fairly subtle concept, and we need to make sure that this trough is indeed straddled. And I speak about how you can make sure that you know that it is straddled in the detailed video about the S&P 500. If, of course, the 80-day cycle trough has not yet occurred, and in other words, this pile of diamonds shouldn't be here, and the 80-day cycle trough is yet to occur, in other words, price will come down and form the 80-day cycle trough within the next week or two, then of course we will still be taking a short trade, but it would be a short category F trading opportunity. And of course we will be working with a different underlying trend, and so our position size will be very different if that turns out to be the case. Either way, we are going to be entering into a short trading opportunity next in the S&P 500. Let's take a look at the Nasdaq. Now, the situation has been different in the Nasdaq, of course, because we are tracking the alternate analysis here, which has an 18-month cycle trough in November. We can't see that, it's off the left-hand edge of the chart, and an 80-day cycle trough which occurred at the end of December 2012. And as I mentioned last week, the Nasdaq has been very tricky recently because it has been tracking along the FLD. As you can see, in fact, it's been tracking along that FLD for a period of about 4 weeks or even slightly longer. So that makes trading in the Nasdaq at the moment a very tricky proposition. And of course, in last week's video, I discussed how you might want to simply step aside from the Nasdaq. I did have an entry level below this obvious support level that is formed just above the 2700 level. As price came down on Monday, we weren't stopped into that trade because it did not break below that support level. That support level has held, and it has provided a very strong support for the Nasdaq, as you can see, over the past month or so. The Nasdaq bounced back up again, and so it is still not entirely clear what is happening in terms of the cyclic picture. It is possible that the 40-day cycle trough that we've been expecting, as you can see from this nest of lows here, that 40-day cycle trough occurred in fact last week on Monday. And therefore the E category trading opportunity was one that we could not enter into because of the situation between price and the FLD. In other words, price was tracking along the FLD, so we couldn't get a clear entry into the E category long trading opportunity. But nevertheless, the next trading opportunity in the Nasdaq will be a short F category trading opportunity. And it looks as if the price has now broken away from the FLD. And so it is probably going to provide us with a nice, clean, clear entry level into that F category short trade. It is not impossible that the analysis that we're tracking in the S&P 500 is also still valid in the Nasdaq. In other words, the trough that formed last week on Monday was not a trough of the 40-day cycle, but was in fact a trough of the 80-day cycle. It's not impossible. It is less likely in the Nasdaq, I believe, but it is certainly possible. And if that is the case, then again we will be watching price movement to see whether it exhibits clear examples of being a straddled trough, that 80-day cycle trough. If it does turn out to have been a straddled trough, then we will still be entering into a short trade in the Nasdaq, but it would be a category B short trade. So it will have a different position size, of course, because of the different underlying trend. And if price movement moves in such a way that a straddled 80-day cycle trough is clearly out of the question, then that will of course change the situation. So take a look at the detailed video about the Nasdaq for a discussion about the possibility of this being a straddled trough, and whether we're entering into a B category or an F category short trade next in the Nasdaq. Either way, I will be entering into a short trade in the Nasdaq. It's just a matter of what our position size will be according to which analysis looks as if though it is indeed playing out. The euro to US dollar has been exhibiting much clearer cyclic moves, and as you can see, this is the analysis that I call the short cycle analysis, as you can see, and it has the 80-day cycle trough at the beginning of 2013, early January, and we took a profitable A category trading opportunity and then a C category trading opportunity, and the next one was of course a D category trading opportunity. Strictly speaking, I should have entered into this trading opportunity at the low of last week, Wednesday, but in fact I effected my entry slightly lower, and I discussed my reasons for having done that in the detailed video about the euro to US dollar. Of course, that was a displaced entry. Our entry price was below the crossing point. The crossing point was up here, and so therefore our T2 target and our T1 target were actually fairly close to each other. And on Friday, our T1 target was hit at about that level, and our T2 target, our modified T2 target because of the crossing point level, was also hit. So we exited from both trade 1 and trade 2 at a profit, and locked in our profit for this trading opportunity, because of course our stop loss on our remaining trade 3 has been reduced to the break-even level. And so that's where the stop loss is. In the detailed video about the euro to US dollar, I speak about how you might want to effect an even tighter exit from this trade, because of course category D trading opportunities are often trades that you need to exit from fairly nimbly. You need to be fairly quick getting out of them, because it is possible that the 40-day cycle trough has now formed. You can see the nest of lows at the bottom of the chart there. It's possible that it formed last week on Friday, and so you might want to effect a tighter exit by applying a trend line such as I've just drawn on the chart, or by using one of our other methods for effecting tight exits from trading opportunities that require it. So take a look at the detailed video about the euro to US dollar for more about that. The British pound to US dollar fell from grace last week. It was, as I mentioned several times, my favorite instrument last week, because we had had such a very successful run on the British pound to US dollar. All the way back to November last year, we made a profitable A category trade, and then of course our profitable C category trading opportunity, and then was the Christmas New Year break, and we were in a very profitable F category short trade, which exited about 10 days ago. And last week I was speaking about how it looked as if though we had seen a double GH interaction, and I did say that it was possible that that GH interaction was not yet complete, and I believe that that is in fact what happened, because price bounced back up to the FLD and then fell away from it. In the detailed video about the British pound to US dollar, I discuss why I don't think that this was a triple GH. In my experience, you very, very rarely see a triple GH interaction. I speak about this in the detailed video. I think that in fact the G interaction that started taking place about 10 days ago simply wasn't complete. But nevertheless, it meant that I entered into a losing trade on the British pound to US dollar. Fortunately, it was a very small trade because of the very bearish undertones to this market at the moment. I was entering into a very small long trade, and it went straight down to stop loss. So we took our loss on that trade and got out of it. There wasn't really much of a lesson to be learned, as I discussed in the detailed video, because in fact I was doing the right thing, but it just appeared that price hadn't completed its GH interaction. And so in fact 2 days later, on Thursday of last week, I entered into a long trade again in the British pound to US dollar. And this one turned out to be a profitable trading opportunity, and I believe that it was the A category trading opportunity that we've been waiting for. And I exited from that A category long trade earlier on today, as you can see at this level over here, because of a very important thing that happened, and that is that on Friday the T2 target was almost reached. In fact, the market fell 18 ticks, or some brokers would refer to it as 1.8 ticks below that T2 target. It's a very, very important thing. When price almost reaches the T2 target, you need to tighten your stops, and so that's what I did this morning. And so if you have a look at the detailed video about the British pound to US dollar, I explain how and why I did that. Of course, our T1 target was reached with ease on Friday, and we exited from our trade one at that point over there. So the British pound to US dollar did eventually yield a profitable trading opportunity for our A category trading opportunity, but it has fallen from grace. Let's take a look at our spreadsheet, where I, of course, keep track of what we've been doing. First of all, last week we exited from our trade 3 on our euro to US dollar long trade, because we hit the 3-bar trailing stop, and we took a profit there, as you can see, of $214 roughly. And we also entered into a short trade in the euro to US dollar. And as discussed, that was of course a D category short trade, and our T1 and T2 were both hit, and you can see that combined they made $140 and about $160 profit. So that's an additional $300 profit for the euro to US dollar. That was the good news last week. The bad news last week, of course, was the S&P 500 short category trade that we entered, and I was entering at a high level of risk because I was convinced the market was going down, and so we lost $1,125 from that trading opportunity. So that was certainly a lesson to pay attention to those rules that I created about entering trades on a Monday. Anyway, so that was a loss in the S&P 500. In the British pound to US dollar, we have just exited from a profitable A category trading opportunity, although not a very big profitable trading opportunity because of the very bearish undertones in the British pound to US dollar at the moment. So there you can see we took a profit of $150 and $160. That's $310. So we took a profit of $310, and we had earlier sustained a loss in the British pound to US dollar just a few days earlier. So that was a loss of $450, give or take. And so we've got 2 negatives there, and we've got 3 positives. For the whole week, we in fact took a loss of $750. So not a great week by any means, but certainly some lessons were learnt, and in fact that has been our first losing week in these Hurst Trading Room videos. So it's not the end of the world. It turns out in fact to be less than 1% of our trading portfolio. So a loss of about 0.75% of our trading portfolio because of those losing trades in the S&P 500 and the British pound. And that's it for this summary, the video update summary. Please take a look at the detailed videos, because there are several important points that I'm making in the detailed videos this week for your trading of the FLD trading strategy. If you have any questions or comments, please put them into the comment box below this video. I look forward to seeing you later this week or next week, and I wish you profitable trading for the week.